I heard this rumor, a strange rumor, late in the week this week that it was a market downturn. Did I hear anything about a market downturn? Live from the apartment above Uncle Jack's garage, while our basement's being renovated and moved to Detroit, Michigan. Welcome, Stackers. I'm Joe Saul-Sehy, Average Joe Money on Twitter. Welcome to Money in the Morning, the show that we go over not one, but two headlines we rip from the press. And we not only read them, we also comment on them and talk about what this might mean for your wallet and your money management. And then at the end, as if that's not all, we take those two headlines, put them together, and send you home with something we call the big idea. One big idea we have today is that you should check out Lemonade. Thanks to Lemonade for supporting Money in the Morning. Get Lemonade renter's insurance in seconds by heading to stackybenjamins.com/lemonade. That's stackybenjamins.com/lemonade. I actually quoted on here before how much money I paid to Lemonade, and somebody thought that was what Lemonade cost. I have some very specific circumstances. The big point that I made before was that I saved half over the other people that I checked with. And I kind of know where to check. stackybenjamins.com/lemonade. Check it out for yourself. Don't pay attention if I tell you my number. All right, we've got some fantastic headlines today, some that are scaring people. So let's get this party started, shall we, Laura?
Here are today's Money in the Morning headlines. Ready, set, go.
Set, go, Laura says. So I think it's time for us to go. And by go, I mean head to CNN Business. This is written by Matt Egan. And actually, I'm opening up with see, you can tell we do these live because I'm opening it up with the wrong headline. There's actually a bigger headline. We're going to talk about that one in Wells Fargo here in a minute. But let's grab instead this one, which comes to us from money.com and is written by Gregory Calderon of Bloomberg. The stock market had its worst day since February. Here's how worried you should be. And before I even read this, I saw some great stuff, just some phenomenal stuff. We're recording this late in the day on Thursday, and I saw some phenomenal headlines. I saw the word plunged. I saw the word historic. I have seen just some and here I'm seeing here's how worried you should be, meaning you should be worried. But should you be worried? And then I'm in these financial Facebook groups and people debating what they should do. It was one day, the market down about 3.5%. What do we do? Let's read on and then we'll talk about what to do. Mr. Calderon writes, the S&P 500 fell the most since February, and the NASDAQ 100 had its worst day in 7 years. But while the size of the declines were a shock, Wall Street traders reported little in the way of panic. A quick survey of 10 sell-side and buy-side traders found an uptick in hedging activity on Tuesday and early Wednesday. Others said investors stepped in to add to positions, with the majority of sell tickets driven by passive funds via program desks. We're going to stop right there. We're going to stop here a lot because what does that mean? What I just said. This is a big thing right here. Number one, stock market the most since February, the S&P 500, the NASDAQ its worst day in 7 years. But traders reported little in the way of panic. When they talk about little in the way of the panic, they're not talking about you and me. They're talking about people on Wall Street. The pros that see this every day, you didn't see that. What did you see? You saw an uptick in hedging activity. Just to tell you a little bit about what that means, people hedge their positions in a couple ways. They either buy a position on the other side of the fence so that either way they kind of stay stable, or they buy what's called an option. And an option says, I sell an option right now at the price where I'm at. This is one of many option strategies, but I can sell the price that it's at right now. And if the market continues to go down, I can then exercise that option And I end up getting the money that the market's worth right now, minus whatever the cost was of that premium that I paid. So it's like buying an insurance policy. And people might say, well, why don't I do that too? Well, these insurance policies are priced by pros, and they will use them when it suits them best. And I'll tell you, unless you're somebody that uses options quite a bit, you get how that market works. There's a couple other strategies that work better, but that's the one that they talk about first. And by the way, I buzz through that other strategies that work better because that's not what today's about. We can talk about that another day. Today's about hedging activity when they talk about that. So some traders went out and bought options, and they said there's an uptick in hedging activity. Does that mean that there is a blitz or that there is a deluge of hedging activity? There was an uptick, considerably less sexy. So what are pros doing? Some pros maybe hedging their bets. Some. They also said that investors stepped in to add to their positions. So as the market went down, what did the pros do? They're buying more. And it's funny because you think about whether you should buy more or not. Should you buy more? You know, if you've got a strategy, why do that? Because isn't that kind of playing with fire? Like going and buying more and then thinking, well, you know, the market's slowing down. Like you start moving into this, I think I know which way the market's going mentality. We have no idea where it's going tomorrow. We have no idea where it's going next week. The only thing I would advocate is speed up your savings. Like if you've got the ability to save more money, that part you can control. You should have done it 6 weeks ago. You should do it today. You should do it tomorrow. You should do it next week. That part makes sense to me. But traders, these people that do it every day, some of these people we've reported in the past have huge amounts of cash on the sideline. They're deploying their cash. Market goes down. They're deploying their cash. Facebook groups I'm in, people in a panic. What do you do? The majority of sell tickets, meaning the majority of trades where people are trying to get the hell out, are in passive funds via program desk. Passive funds means people in exchange traded funds. Why are you in an exchange traded fund? Well, Joe, here's why I'm in an exchange traded fund. If I buy the S&P 500, I get 500 of the biggest companies in America. So I get instant diversification. So now I don't have to pretend like I'm Joe Day Trader. That's fantastic. So why are most of the sell tickets coming from people that already own those types of positions? It drives you crazy. You buy these positions to take care of your money so that you can't, well, you can. If the whole economy goes under, we should all just buy rifles and move to the woods, right? But assuming that the economy is going to continue, what should we do? We should diversify. We should own 500 of the biggest companies in America because the chance of all those going under, very, very, very slim. And as I mentioned, if it does happen, it doesn't matter where you are. So why do this buy sell? Your cash ain't going to be any good. It doesn't matter. So very frustrating for me to see. No panic on Wall Street at all. Orderly trading, but a bunch of sells coming from people that don't know any better. Oppenheimer, head of institutional equity derivatives. Oh boy. It is today's explain stuff day. I'll apologize. Some days we just kind of roll through it. Today I got to keep stopping the piece because I got to tell you what the hell these people actually do. Oppenheimer is a fun company. You probably heard of them. Head of institutional equity derivatives. Equity derivatives are packaged products built on top of packaged products. These are people playing in the margins. So you know how if you've ever been to a casino, you have like the main ways to bet, and then you got these crazy ways you can bet, right? These marginal things. Derivatives, let's just say they're in the crazy department. And once again, some people play there, but they play there all the time. They know what they're doing, and it's a part of their overall strategy. Then I see Joe 9 to 5 goes out there and tries to play in the derivative market. No clue how it works. Ends up taking a bath. It's almost like there was a movie about poker called Rounders. Did you see Rounders? In Rounders, Matt Damon says, if you sit down at a table, and I don't remember the exact phrase, but if you sit down at the table, you don't know who the sucker is, it's you, right? If you don't know how derivatives work, you are totally feeding the system. Don't get involved. But anyway, once again, these are big time pros when we talk about Oppenheimer's head of institutional equity derivatives, Alon Rosen. He said in an email, over the past 2 weeks, we've been aggressively looking to add November ETF downside trades and long volatility exposures into November as companies like Borg Warner and Delphi Technologies issue profit warnings citing global concerns such as trade softness in China and FX. Meaning, he's been buying them up for a while. He's been buying up the fact that we might see some downside for a while. The big piece there that most people don't talk about is that's part of an overall bigger strategy. He's been doing it for a while. He's not reacting on today. He's reacting on data coming out months ago. Part of an overall strategy. If you're moving in these days, in these conditions, you have to ask yourself, I think, if it's part of an overall strategy. Many are pointing to overall confusion, gross exposure reductions, risk parity factor related unwinds driving the overall selling, Rosen said. ETF options volumes have been relatively light since Friday's initial breakdown, and we'll like to see that pick up and more activity in the puts before any before any true stabilization kicks in for a tradable bottom. I'm not going to go into what any of that means. Let's just put it this way. Sounds like the guy's throwing stuff at the wall. Journalist needs a reason why things are happening. Guy's giving him 50 of them. The great book I like called Trading Rules, very dry if you read Trading Rules, but a book that I like goes over this trader's rules. And one of them is, don't try to pretend you know why the market did what it did. People move for a variety of reasons you're never going to know. So you can read pieces all day that tell you that they know, that you don't really know. Let's see what our friends on Facebook say. We do these in front of a live Facebook audience. If you want to be part of our Facebook audience while we do these without a net, head to facebook.com/iStackBenjamins, and we come on sometimes at crazy times during the day. We got Jacob here, says good morning. Good morning, Jacob. People are teasing me because we're doing an afternoon edition of this recording. Dylan says, I heard there was a market crash, but I thought they meant a car ran into the grocery store. Dylan's here all week, folks. Tip your wait staff. Where were you when we were at the Improv? Because Dylan would have been perfect. Eric says, downturn, head for the bunker, grab the gold bars, panic. You think our friend Len Penzo over on our Stacking Benjamin shows, high-fiving everybody, saying, 4 years after he said the market was going down, it finally is, and he called it. Like Len's that guy that called, 15 of the last 3 downturns? It's fantastic. And Dylan reminds Eric to grab the most economical sandwiches. And Gregory says, I pretty much buy as much as I can, as soon as I can. That's the key. Don't buy more based on, if you can buy more, buy it. But my question is, why didn't you start that 4 years ago? If this is the best the market has looked in terms of buying opportunities since February, anything that you've been saving the past few months for today, there's a good chance that you still would have been better off having bought back then. Eric points to consistency, dollar cost averaging for the win. Eric gets the gold star. Colin says he's going on a stock market shopping spree. I like that idea, but I like even better, because I think that, Colin, might lead to market timing and trying to guess which way it goes. I like the consistency of just keeping the ball rolling and figure out how he can buy more. But keep it going. And Kimberly says she's okay with moving to the woods. She could live the bunker life like Len. Kimberly and Len living next door neighbors in the woods. Len would be a fun guy to live next to. For those of you that don't know Len, just check out our Stacking Benjamin show. And Eric says that piece was buzzword bingo. I totally believe it. Let's move on to our second piece, which, as I alluded to earlier, comes to us from CNN Business. This is written by Matt Egan, as I also said earlier. Wells Fargo customers are fed up. Can you believe that? Wells Fargo customers actually fed up. they could yank billions of dollars in deposits. Wells Fargo customers, frustrated by a cascade of scandals, could yank tens of billions in deposits from the bank over the next year. An industry high 30% of Wells Fargo's customers are at risk of dumping the scandal-ridden bank, according to a report published on Wednesday by consulting firm CG42. The report, based on an online survey of 4,000 Americans, projected that Wells Fargo could lose $93 billion in deposits. $93 billion in deposits over the next year. That would represent about 7% of the bank's total deposits. CG42 found that a growing number of Wells Fargo customers are fed up with the nation's third largest lender. Their top complaint is that their bank was engaged in, quote, dishonest, unethical, or illegal practices. Others bemoan that Wells Fargo is trying to sell them products they don't want or need. There's no doubt the frustrations are a direct result of the nightmare that began 2 years ago at Wells Fargo, according to Steve Beck, managing partner at CG42. Quote, the bad behavior is coming home to roost, Beck told CNN Business. Customers are saying, we've had enough. It's time to move on. Wells Fargo's reputation has been tarnished by a series of shocking admissions. The bank had said that it created up to 3.5 million fake accounts, charged customers mortgage fees that weren't necessary, and auto insurance they didn't need. Some Wells Fargo borrowers even had their cars repossessed as a result. About 12% of Wells Fargo's customers are expected to move their money elsewhere over the next year, CG42 estimates. Factoring in new business, Wells Fargo is likely to win. The bank's net deposits could decrease by a net $75 billion. That would translate to a loss of $2.1 billion in sales. Wells Fargo possibly shrinking. Later on in the piece, by the way, they talk about how Amazon might be a threat. I'll link to this on my Twitter feed at Average Joe Money over there. Wells Fargo. I can't believe, by the way, that people would leave. I mean, why would you leave a bank like Wells Fargo, right? Acting in your best interest, keeping those fees low. Hey, I mean, cut them a break. They made sure that you had auto insurance, even if you already had it. Like, they didn't know, right? They just gave you some more. You're welcome. They opened up accounts in your name. You're welcome. No, I'm joking. My question is this. This isn't just about Wells Fargo. Like, why? When this stuff happened 2 years ago, is Wells Fargo maybe, according to one consulting agency, going to pay? It's been a long time. Like, if you're still at Wells Fargo, actually, I'm looking at our friends in the audience. Rebecca said this first, said, why did they wait this long? My feeling exactly, Rebecca, what are you waiting for? I mean, don't get me wrong. I'm not saying leave Wells Fargo. What I am saying is, if you are going to leave, what are you still doing there? Because nothing's happened lately. Like, I haven't seen anything happen in the last few weeks that would make me leave. What makes you wait 2 years or maybe 3 years if it's over the next 12 months before you say, you know, it's time to change my bank? I think you always need to scrutinize your bank. I think making sure that your relationship with your bank, that bank that you use every stinking day, is a solid one. And while I don't need to know that every person that works at my bank is phenomenal, I need to know that if I get in an emergency, I've kind of got the right bank behind me. I bank at a regional bank here locally, Guarantee Bank. And if you look up Guarantee Bank, they are fairly innovative. You'll also see that they are known for their customer service. I don't like to call Guarantee Bank, but whenever I have to call Guarantee Bank, it's amazing. And sure, the app is good, not the best app on my phone. The web presence is very good, not the best web interface I've seen from all the banks we talked to and, FinTech Friday over on Stacking Benjamins. But they're really good. And I can call people, and I know who to call. And even as I move across the country, I'm going to stick with this bank because they've proven that they can help me and that they seem to be very helpful. And by the way, Guarantee Bank, if you want to sponsor the show, it's joe@stackingbenjamins.com, because I just did that. That was a freebie. But it doesn't have to be that, right? I mean, it can be. I was just at MBKC Bank who is a very innovative bank doing some cool stuff in Kansas City. I've talked to the people from Simple before, another innovative bank, a Chime. You look at some of these online banks and what they do, and there's a compelling argument to start looking nationally for your bank instead of just going into the brick and mortar section. When I move across country, I'm not going to have Guarantee brick and mortar anymore, but I don't need it because every time I call them, we're able to just do it over the phone or do it online if I have a big problem. So figure out who's in your corner and bank with them. If it's Wells Fargo, that's fine. But this headline kind of surprised me that people are finally leaving Wells Fargo. Like Rebecca said, why wait that long? Dylan's here. Hey, Dylan. Dylan says, I hope Wells Fargo continues to lose since I work for a competitor. Nice job. Dylan said that, Wells Fargo, not me. Eric said it's hard to change corporate culture. I agree with that. It is so difficult, and it comes from the top. And even if you remember, they kind of said the right things, Eric, when they first started making changes. And then even more stuff came out after that showed just how embedded in that company culture it is and how far are they going to have to get knocked around before they turn the ship. I guess that's something that we're going to see. Lori says, my 401k is with Wells Fargo, so I feel a little stuck. That is tough. Though, Lori, you always have a recourse, and it's not the lawsuit recourse we see some people have. And Wells Fargo has been on the end of some of those lawsuits about 401k plans. Wouldn't go that far, but I would talk to my HR people and say, is there a reason why we're still affiliated with a bank? If you feel strongly about Wells Fargo, then move. And I only say that because you said, I feel a little stuck. Once again, if you like Wells Fargo, then hey, stick with them. But if you don't, I think even in a 401k, you've got some resource there. Dylan says, I think more people think it's more difficult to transfer banks than it really is. Some hop banks every few months for sign-up bonuses, so it's really not that hard. If you want a free toaster every few months, do they still do that? Like the free stadium blanket or the toaster if you change? I don't know. But there's all kinds of sign-up bonuses. I actually think, Dylan, people lose money on that deal. Like the amount of time it does take. I understand it's easy, but the amount of time it takes and effort it takes to change everything and then change it again, do you actually win versus using that time to do something else? I don't know. But I've seen people do that before. Susan's here. Hey, Susan. She said she's never been to her bank, which is USAA. Just having been to USAA headquarters a few times. Talk about people that pick up the phone and can help you do anything. Amazing. And USAA, they were the ones that first did the check recognition, right? Take a photo of your check and deposit it right from your phone. Pretty innovative people. Adriana's here. Adriana says, represented a client that got a home loan through Guarantee Bank. Smoothest process I had that year. Yeah, it's every time I've had to deal with Guarantee Bank, it's been pretty amazing. Rebecca says, and now it's becoming a commercial for everybody's favorite. Rebecca says she's happy with Capital One 360. I have them with my points venture card. Kimberly says my local bank offers cookies, which I think will be a selling feature when I start taking my son there to deposit his allowance. I like the idea of cookies if you have to go in. Mine has Guarantee Bank has these little mints. Not a reason to bake somewhere, but talking to the president, and we had the president of Guarantee Bank on Stacking Benjamins, I'm going to say maybe 3 or 4 years ago. It's been quite a while. But he was talking about they don't want you to come in. They want to make it easy for you to bank with them. So if you don't have to go into the lobby. But if you come into the lobby, they want to make it a great experience. So cookies, mints, people, but at my bank, they just have these people at these little kiosks instead of, you feel like you're standing at like a little stand instead of they're on one side of a, big, counter, and I'm on the other side. And sometimes they're on a raised platform, right? When I was with Bank of America, they were on like a raised platform, kind of looking down on me, and I'm feeling scared. Probably not. Dylan says you get more like $200 to $500 to change banks. And so you can make a couple grand a year from jumping around for a few hours of work. Maybe it's worth it. And Aaron's here, says Ally Bank, and they are in Michigan. They are in Michigan. And it's funny, Aaron, we're talking to Ally Bank a little bit about doing some partner stuff with them, like very, very early stage partner stuff with them when we move the basement to Michigan. So that will be neat. And actually, Paul and Shireen are here. I don't know which one it is, but they make a good point. Credit unions, very customer friendly. Totally. If you can't find a great bank, your credit union is owned by the people that have the deposits, and credit unions incredibly friendly as a whole. I signed my daughter up for one in Fayetteville when she went to college, and that was probably the only credit union I've seen that is just incredibly backward. And I still don't understand how they stay in business. Not great. So, and Susan says she saw a commercial for Capital One Cafe last night, trying to change the in-person experience. I like the innovation. I like seeing the innovation. Let's forget all that about banks. Let's do one other thing, guys. Why can't we figure out ACH? Like ACH, your money disappears for sometimes 2 to 3 days. It was like that in 1993 when I became a financial planner. Why has ACH not changed? Like, you see all of this innovation, and ACH is still the same. Just amazing. All right. Everybody's telling us their favorite bank now. Hey, Patrick, let's do this in just a second. I want to tie this discussion we had about banking and the discussion we had before that about the stock market drop, put those together into something we call the big idea. Going to do that in just a second. But first, I want to talk a little bit more about Lemonade, because I had made the mistake earlier of talking about Lemonade and the amount of money that I paid. The piece that people missed was that it was so much less money to go through Lemonade, and their claims experience, the way that they pay claims, which really is the reason you have insurance in the first place, isn't it? If something goes wrong, I want to have my claim paid quickly. That's actually, for me, been a great thing with some of the other companies out there that we've talked about, I go into my bank, having the highest interest rate is great, but getting any problem I have resolved quickly, even better. Nobody really loves their homeowners or insurance company. At least I've never met one before I started talking about Lemonade. Fill out endless forms, maybe send a fax, and when you need them most, they hike up your rate. Well, Lemonade's different. They're powered by artificial intelligence, behavioral economics. Lemonade replaces brokers with bots and paperwork with algorithms. And what that means to you is you get your policy in seconds. And when I say seconds, I think it took me 45 seconds. Starting at just $5 a month. The best part, you choose a charity to support. Lemonade will donate your leftover premium money to the cause once a year. From a necessary evil into a social good, who knew insurance could be so fun? Just head to stackybenjamins.com/lemonade, and you'll get a quote in 90 seconds. I think mine was quicker than 90 seconds, but think of all the things you can't do in 90 seconds. And here's the point. Even if you don't think you're going to switch, if it takes 90 seconds, Dylan talks about people making $200 to $500 to switch bank accounts. Imagine that you pay half for your renters or homeowners, and it took you 90 seconds to make that switch, or at least take a look. stackybenjamins.com/lemonade. That's how you support the show, if you like it, by telling them that we sent you by using our link. So thanks to everybody who did that. All right, let's talk about the big idea today. My big idea is this. When it comes to the stock market, I feel like the people that I've seen online talking about the market are people that don't talk a lot with buy and hold people that have done their homework over longer periods of time, that have looked at the market. And when it came to becoming a good investor, the first thing I had to do was to surround myself with people that knew more about it than I did. And you see traders on Wall Street not panicking, and you see the average person trading their exchange-traded fund like the sky's falling. If you surround yourself with people who are more like those traders on Wall Street, and I'm not saying because they day trade, but because they have a better idea of what the heck's going on, better off you're going to be. It worked for me with running. It works for your diet. Who you surround yourself with is so important. And when it comes to your banking stuff, we talked about your bank. If you've got Wells Fargo and you don't like Wells Fargo, and you don't have a relationship with them, and they're not helping you, why would you stay? Surround yourself, especially when it comes with your financial picture, with people who are a little smarter than you, people who know more about how it works than you. And I think then it becomes real easy. When you have a problem, you don't have time to be an expert in everything. So make sure you've got smart people around you so that you can pick up the phone and say, hey, Hal, who, by the way, is my guy at Guarantee Bank. Hey, Hal, what do I do about this? You know what Hal says? Here's what you do, but better yet, I think I can help you by doing this thing over here that will help you even more. Smarter guy than me in that particular area. I don't have to be smart at everything. I just have to be smart enough to know who to surround myself with. And I think that's our big idea today. A lot less panic in the market if you know people who know. A lot less banking problems, a lot fewer banking problems if you have the right people on your team. That's going to do it for today. Thanks a lot, everybody. Fun discussion about banks and about the stock market on Facebook today. Go stack some Benjamins. We'll see you back here next time at Money in the Morning.
Money in the Morning is created by Joe Saul-Sehy and comes to your ears because of the collective genius of our producer, Richie Rutter-Reese, engineer, Caden Thompson, and a pack of very well-trained ferrets here in the basement. You'll find links to all of our headlines featured on today's show in Joe's Twitter feed at @AverageJoeMoney. I know you already know this too, but Money in the Morning is for entertainment purposes only. You shouldn't act on anything recommended by a bunch of entertainers in a basement without first consulting with your financial advisor and second, having your head examined. Have a headline you'd like us to discuss? Send them to Joe at StackingBenjamins.com or put them on our Stacking Benjamins Basement closed Facebook group. This show is copyright 2018 Stacking Benjamins LLC, all rights reserved. I'm Joe's mom's neighbor Doug, and I reserve the right to always say, we'll see you next time back here on Money in the Morning.